All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I'm going to do a few things here this morning with you. Market's open. Been open here for about 30 minutes. It's slightly in the green, depending on what you're looking at. This is a day where tech is lagging, kind of like yesterday. Tech led a little bit, but today tech is lagging with U.S. small caps leading. And yesterday we saw small caps lagging. And, tech leading. And so we see this kind of ahead of Apple's earnings after the bell here today, which I think are going to be a pretty big deal for, for a lot of things out there as far as, what they are tech related. We do see the U.S. dollar on the decline here today for the first time in a while. That's, not something we have seen very often. And so that's helping to prop gold up. Gold was at a multi-week low and, pushing on higher here this morning. But if you ever want evidence that gold is a currency, you kind of look at, the action here of late as the market hit new lows. It wasn't like we're talking about gold surging and, pushing up to any kind of new highs here. But when it comes to markets, there's a lot of data, there's a lot of information, there's a lot of news. It's nonstop. In fact, there are billions and billions of dollars put into just the news and information on the market. It's just a huge thing, right? And I oftentimes hear the statement, well, the news drives the market. And, in some respects, that's partially correct. But when it comes to the markets, news, analysts, those types of things, they drive the ripples and the waves. They don't drive the trends. The trends are driven by the economics and the earnings, which are hand in hand, right? And so it's one of those where, if you're a really short-term trader, you really have to focus on the news. If you're a longer-term investor, who cares about the news? Forget it. All it's going to do is create chaos and headache. And it's one of those things where, people go back and forth and do I pay attention to the news? Do I pay attention to the economics? Well, this one's, the economics are good and the earnings are good, but the stock's going down because of the news. Well, it's generally a ripple. It's generally a wave, not a trend. And right now we are in a market that, some of the fears and angst and news is worried about the earnings and the economics, and so they can kind of get a little bit intermingled here, which they obviously have to some degree. This morning we had the release of the ISM ISM manufacturing number, which, every month you hear me say the same thing on it. To me, it is one of the most important numbers that the market gets. And it's not because, everybody's anticipating it and, oh no, CNBC is talking about every little detail of it. No. In fact, if you want the more news headline, more actual instant reaction, you go to the jobs report, right? But when you want to look at what the trends are, when you want to look at what drives the trends, this is one of the best reports. And we had a release here this morning. And it came in at 57.7. Now, this is a survey. So anything over 50 is growth. Anything below 50 is contraction. So 57.7 shows growth. Now, they break this all down, right? They break it all down. It's a growing number. But when we talk about derivatives or rate of change, it's growing at a slower pace. Last month was 59.8. So yes, there's growth, but it's slowing. New orders, 61.8 last month, 57.4 this month. Growing, yes, but at a slower pace. Production, growing at a slower pace. Employment growing at a slower pace. You kind of see what the theme here is. Supplier deliveries, okay. Inventories, okay. Customer inventories, who cares? Prices increasing at a faster pace. Ooh. When you have prices increasing and other things slowing, yikes. Backlog of orders, is growing at a faster pace. That's a decent number. Exports are growing, but at a slower pace. Imports are growing, but at a slower pace. The overall is, yes, the manufacturing sector, it is growing, but it is growing at a slower pace than what it has been. And we saw the instant reaction be down, here with this number. And, it is one of those that I look at this number and I think it's great evidence. I think it's fantastic evidence to the fact that we're not going to see a V-shaped recovery on this correction. What do I mean by V-shaped recovery? Well, I mean market goes down and then boom, pops right back up. And I'm still in the camp that I still expect we will see new highs. But it is not going to come in a V-shaped type recovery. It is going to be something sluggish, long, drawn out, consolidating up and then dropping up. And, by the time it hits a new high, everyone's going, wow, the market's hit a new high? Well, that's kind of what it's going to be like. And I think this number points to that. I think this number is some very nice evidence, here to that. Now, with this, last month's numbers, let's face it, we're so good, it's kind of hard to outdo it, right? But as we get into next month, it's not going to be as hard to outdo it, right? So we can see that switch from growing at a slower pace to growing at a faster pace, relatively quickly. And, we'll see how the market kind of, takes this. But the overall market has been worried about an earnings top. It's been worried about an economic top. And while, yes, we see that future growth, it may not be as strong as some of the growth we've seen in the last several quarters, it's still growing, and it won't take much to grow at a faster pace, especially with a lot of the comparables coming on down. And so I don't think we can look at this and argue bears win. In fact, I think it's completely the opposite. I think it's, you can argue bulls are going to win, but how they're going to win, how they're going to ultimately take this. And I think this number, does a really good job of showing it. And, so that's going to be my expectation as November, December, play out here over the next little while. Okay. So anyway, not a lot in terms of earnings here this morning. Big one with Apple after the bell here today. The reality is that for the most part, we've seen the bigger earnings, and maybe a few in retail we haven't seen, but we've seen most of the bigger earnings, most of more of the market driving earnings, and from here, it's going to be a little bit more, Apple's going to affect the tech sector, but after that, it's going to be a little more, okay, they're just individual stories, not necessarily broader market stories. It's not going to create, where you have some positive Facebook, and so it lifts everything up big, or you have some negative some negative Netflix and it drops everything, or negative Amazon and it drops everything big. I don't think we're going to see that, anymore throughout this earnings season. I think that's kind of gone away. Now, yesterday the market vibe did turn neutral, and kind of what I was expecting, that it would turn neutral before going bullish, and that's what we saw. We saw it turn neutral, and that's kind of how I look at it here. And, what does that mean? Well, that means we're probably not going to have the same magnitude of volatility. Meaning, to expect an 80-point swing from high to low on the S&P 500 going forward, we're probably not going to have that. 40 points? Sure. 30 points? Sure. 80 points, 100 points? No, those days are probably gone. Right? We may have one, maybe two, based on something news-driven in the short run. But in general, the range on the market's going to shrink up a little bit. It's not going to go back to 10 points a day. By shrink up, I mean 20, 30, 40 points a day is probably what we'll see as the norm for the next little while. And so we'll see if those metrics turn bullish. They have a long way to go to turn bullish. One of the best things you could probably watch if you're just chomping at the bit, you want to know, okay, when does it turn bullish? Well, you take a look at the bullish percent index and you say, hey, a 6% rally, that's a bullish move. That means bulls have control. And you'd be spot on. It has a 6% rally, and according to the bullish percent index, control has gone from the bears to the bulls. This is one of the things that factored into the jump in the market vibe yesterday into pushing into neutral. It hasn't quite been 6% as of yesterday's close, but it's up over there now. We saw this back in February on the initial bounce, where we came in and, saw that the next drop, obviously there was some erosion there in it. I always like when there's a little bit of divergence, in this bullish percent index, but it is definitely something, to watch and to understand that yesterday and the day before. So basically from Monday close to yesterday close, the market conditions changed. We don't often see that at the end of a month where the market conditions change. It's common to see some selling in the last hour of any month. That's more normal than abnormal, but we saw some conditions start to switch up, start to change up a little bit. Not bullish enough to be strongly in control for the bulls, but you come in and you start looking at things like one of my favorite. You've seen me show this many times before, but a performance chart here of the S&P relative to the IWM, so small caps versus large caps. Right? Small caps are still lagging. Small caps are still lagging over the last 30 days. Small caps are down 8.75%. Large caps are down 6.8%. But the gap of lag is starting to shrink. And, generally that's a very positive sign. Is it enough to turn bullish? No. No, in fact, the IWM needs to be outperforming by over 2% over a 30-day period to really show, okay, you know what, bulls have control here. But we're seeing a shift. We're seeing a change in that wind, starting to come in. Okay. So anyway, that's some of the market open, and the ISM data. We still have the market kind of chopping around, doing its morning open stuff. It's first day of a new month. I'm not going to read too much into things, on the first day of a new month. But I'll be back here. Give me about 5 minutes. I'll be back, and I want to break down the challenge watch list. We'll break down some of these stocks, and I'll show you what I'm looking for, in order to get in order to say, hey, you know what, I want in this, and we'll do that here. Give me about 5 minutes, and we'll talk to you then. Take care.